Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing for the day and for the next few trading sessions. Nifty and Bank Nifty opened with a considerable upward gap but could not sustain at elevated levels and hence experienced sell-off to end the day down 0.32 and 0.45% respectively. On the contrary, Nifty Mid Cap 100 Index gained 0.37%, while the Nifty Small Cap Index ended flat for the day, outperforming on a relative basis. Ahead of the key FOMC statement on Wednesday night, our dollar index is sustaining above 106 levels, along with the US 10-year bond yield once again around 4.9 levels. Hence, we feel one needs to be a bit careful with over leveraged positions at the current juncture. Brent crude oil prices have been range bound between $86 to $89 per barrel, and any move beyond on either side can give way to further movement towards the corresponding direction. We feel these macroeconomic pointers should be closely tracked as they would continue to act as the key catalyst in the market momentum going ahead. Most influential stocks whose earnings release is due today are Britannia, Godrej, CP, Hero MotoCorp, India Cement, REC, Sun Pharma and Tata Steel. Coming to index levels, although Nifty could remain range bound in anticipation for Fed meet outcome, overall till it sustains above 18,980, 19,010 levels, it could witness a continuation of the range bound till 19,150, 19,200. Looking at the OI data from a weekly series, significant put OI has been built at 19,100 and 19,000 strikes, while on the call front 19,100 and 19,200 witnessed considerable open interest additions. Overall range for the day could be 18,970 on the downside and 19,210 on the upside. Coming to Bank Nifty faced price rejection at its 200-day moving average. Furthermore, it's relatively underperformed the broader market. Hence, it is not recommended to initiate aggressive long positions in the index. Going forward for Bank Nifty, 42,600, 42,650 would be a good support zone, and the resistance on the upside would be 43,060, 43,100. Bank Nifty needs to sustain above 43,100 for any major reversal up move up to 43,400, 43,470 on the upside. While on the downside, 42,000 below 42,600 index could test the levels of 42,400, 42,370 zone, which is the 50% Fibonacci retracement of the up move from 38,600, which was seen in March 2023, to 46,300, which was seen in September 2023. Let us now see the sectors and stocks that are looking positive and keeping the short-term perspective in mind. From a short-term perspective, realty, auto, CPSE sectors are looking positive as these indices are still strongly placed above their 20 EMA on the daily charts. From a short-term momentum perspective, stocks like Coal India, Birlasoft, HCL Tech, Titan, Trent, Godrej Properties, as well as Cement Giant Ultratech looks well placed on the charts. If we observe the FI data, FI sold to the tune of 700 crores while DIS bought to the tune of 340 crores in the cash market. FI's long short ratio for index futures remains weak at the current juncture at 13%. On the stock futures side, FIs have bought to the tune of 6,000 contracts, while on the options front, FIs have bought over 63,800 call contracts and also bought 1,40,000 contracts on the put side. Just to summarize, key support level for Nifty being 18,970, 19,020 levels, and resistance on the upside seen at 19,180, 19,210. While for Bank Nifty, key support would be 42,600 and the resistance would be around 43,070, 43,100. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market upsides and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.